The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we settled out Thursday's trade, we found decent strength in the grains and oilseeds led by soybeans, quarter wheat moderately higher, hogs getting a good bounce from the U.S.-Mexico news with cattle under a little bit of pressure, stocks under heavy pressure on Thursday. Plenty to take a look at as we watch headline risk move in these markets, volatility in the trade. Joining us, Garrett Toy with Ag Trader Talk. Garrett, good to catch up with you, my friend. And I'll just say this to start. I feel like the tariffs moving these markets, it's like the weather in the Midwest. If you don't like it, wait 5 minutes and it's going to change, right, Garrett?
Absolutely. You'll get a soundbite off of the Treasury Secretary or a soundbite from the Commerce Secretary, and you'll just get this much of the information. And then 6 hours later, you'll get this much more of the information, and then you get the full story maybe a day later. And it's creates a lot of volatility. We've especially seen that in the live cattle market. We've seen it in grains, but it's definitely more volatility. I think it's something we got to kind of get used to. And in the olden days when we had a pit, people would reduce size, and trade smaller because of volatility. The market's giving you more opportunity, if you will. But for us risk managers and trying to hedge producers' risks, it's aging us by the day. It creates a lot of stress, and it's a lot to manage.
Well, and thinking about this here, I mean, these day-to-day, hour-by-hour moves, I obviously there's tools in the toolbox, Garrett, here, but in the grand scheme of things, I've heard a few people tell me that you can't necessarily get caught up in these hour-by-hour moves at this point. You just got to stick to your risk management plan. I mean, talk about that from a broad perspective, because I think it's a good thing for us to remind producers of right now.
Absolutely. If you're getting caught up in the day in and day out, headline trade risk, market gyrations, you're not a hedger, you're a speculator. When you're developing a marketing plan or you're developing some sort of risk management plan tied with your crop insurance, you know what your break evens are, you determine what your profitability is based off of your production. If you're marketing old crop corn, it's based off of what your production is, and you know what your break even is. If you're trying to estimate new crop sales based off of estimated production or prior production history, you're using target offers. There's certain things that with old crop you need to watch, whether it's spreads and intermarket spreads, that sort of thing. But at the end of the day, yes, it can grate on you psychologically that you see a big sell-off in the grain markets. But at the end of the day, realize that this is just kind of nature of the beast. They'll ebb and flow and they'll move. I don't, unless in a quarter will get you a cup of coffee, but I don't think we're in the same type of scenario as 2018 where we're going to go to $8 beans per se. There's just some things in South America that look like that's not going to be the case. It's been the trade war is warming up between the U.S. and China, but so far it's been very tepid and very methodical. So I think everyone's just kind of feeling each other out, see where we're going. But if you're worried about day-to-day gyrations, you're not a hedger, you're speccing. In reality, with what we do with our farmer marketing stuff, we send out an update on the weekends, to give you a bank executive summary because the day-to-day stuff really doesn't pertain to you. We'll tell you what you need to know, sort of thing. And there is such a thing as too much information, and it's gonna get amplified, I think, over the next 3 years.
I should ask you, as we look at the grain markets, obviously started the week in a lot of trouble. Last 2 days, Wednesday, Thursday, we've added some back. And I look at some of these levels, and it feels like we're at least trying to get back to where we started the week in many of these contracts, corn, beans specifically. We're trying anyway. I mean, what's your take as you look at where things kind of settled up on Thursday? Are we getting ourselves back to maybe some levels here where you can try and get through to get some new support, things like that, Garrett?
Well, the one thing I've noticed is that the markets, as I mentioned, the markets that have impacted the most were the ones that were the longest. Corn, fat cattle, feeder hogs, they all had fairly significant spec money longs. So they've also been the ones that have been impacted. And so the way I kind of see it is that, I think everybody and their brother knew that at some point there'd be some sort of tariffs or trade war with a Trump presidency. However, maybe those markets got out over their skis a little bit as far as the amount of money they have exposed. And when the trade war kind of escalated, it was the equivalent of yelling fire in a crowded theater. And there's only one door to get out, and they all rushed to it. And now, we're kind of getting to a point where ultimately, maybe it's a price reset, if you will. Even before the trade wars, I mean, front end corn was $5 to $5.05. We got the front end finally to $5 corn, had a print at $5. In reality, those last 2 weeks, we work with the grain elevators as well. Those last 2 weeks where we were kind of flirting with that 490 to 505 type level, the farmer really wasn't interested. I think they had, made their sales and we're just kind of watching to see where we could go, sort of thing. So, I think the farmers, the sell-off isn't, ideal, but I think for the most part, everyone's had an opportunity to sell, and I don't really get, people are maybe disappointed in the sell-off as far as maybe what's happening for next year, but I don't think anyone's, has exposed risk, if you will. I think they're comfortable with their positions, at least across our book.
It looks to me too, thinking about that thought and going, new crop thinking here. I mean, D's corn finished Thursday at 451 and our crop insurance price is 450. So we're right at the crop insurance level. Now, I guess from here, does the corn market add a little bit? 470. Excuse me, 470. 470. Yeah. So we are okay. So we are a little bit off of that. I'm getting my numbers mixed up.
No, you're right. A lot of numbers.
I mean, talk about, if we can get new crop corn back up to that insurance level here, maybe beyond it a little bit, Garrett. Could that continue to drive the need for corn acres? Everyone's talking it's corn this year. I mean, talk about that perspective. I think that's maybe more of the focus now is shifting to acreage and the new crop conversation.
That's a very good point, because even with this market bounce, it's interesting to me that the beans are actually gaining on corn. We set the spring crop insurance price. We had the big flat price deflation. And when we croup here, beans are actually gaining. We traded the soy corn ratio back to its highest level since early February, the first week of the crop insurance price discovery period. So, it would argue that, maybe we're trying to buy some acres as we're doing the survey for the March intentions as we speak. So maybe that's an element of it. But I mean, acres are expected to be big. The Ag Outlook Forum printed 94. I think when we come into this thing, a lot of people coming out of Ag Outlook Forum, which it's a economic number. It's not a scientific based. It's just kind of an indication, and it should be weighted as such. But there is, I think, the bias coming out of that is that might be the smallest print that we see. I do think it's interesting is that we had Bayer earnings out yesterday, and their crop science side looked like it was closer to like 92 to 94, which I will tell you, given current demand, anything sub 93, if it's printed, not enough corn acres. Mm-hmm. So we're going to have a spring battle. But at the same time, as dry as things are in the Midwest, that should be conducive to adding acres at some point. But really the corn market is an interesting animal, because we can't, at this point, it looks like we're going to have a decent Brazilian crop. It's delayed. We got a ways to go. So let's not get the cart before the horse. But, the corn S&Ds are still tight. It seems like there's a lot of demand in the world for corn. And therefore, unless we do print like a 96 or 97 million acre type number that completely just throws a bucket of water on that fire, things could still be interesting for the corn market, and there should be some opportunities to market.
Any thoughts in the livestock trade as well as we close out here today, Garrett? Obviously, hogs rallying, some of that Mexico news Thursday, cattle under some pressure. You mentioned the longs in those markets. I mean, any thoughts for livestock producers across the board?
It's keep your powder dry. It's when we get into markets like this where we have a lot of volatility in it, ultimately fundamentals will reign supreme. And we'll come back to fundamentals. And I know we want to talk about meats here, but case in point, like corn. The old crop corn situation is still tight, but they expect big acres. So old crop corn gained on new crop corn today. The spreads are all working. Beans also, interestingly enough. But when that translates to the meat market, their thinner markets were down $2 on headline or tariff headlines. Were up $2 on tariff headlines. At the end of the day, cash is just doing this, and it's staying fairly steady. And that's what's going to bring. That's going to be cash and spreads that ultimately, dictate the trade here, and the market. The rest of it's just noise, to be honest with you. And you just kind of have to tune that out and focus on the true fundamentals. And at the end of the day, I mean, the hog markets, got pretty good demand underneath of it. The cattle market remains tight. I mean, that story hasn't changed any. But if we open up the border, well, then we're going to ship more pork, and that and we're going to have more feeder cattle and fat cattle coming in, and that's it's so lowest common denominator type trade is going to do this, going to do that, and automatically, well, if X does this, then this does that. It seems overly simple, but it's more complicated than that.
Great perspective as always. I need to do a better job remembering my numbers there.
No, you're sorry, I didn't mean to.
No, I thank you for correcting me, because I've said it enough times down the last couple of days, and then I just completely blanked and was thinking, oh, that's the number. So I need people to fact check me, so to speak. Garrett Toy, Ag Trader Talk. Always appreciate it, my friend. Thanks for joining us on the show. Have a great weekend. We'll talk to you again soon.
Thanks. Talk to you soon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.